joining us here on ET Now. You're watching Business at 9, and let's begin with the slew of changes that will kick into effect from tomorrow. That's October 1st. Now, from space, revised norms will take effect for HDFC Bank, Yes Bank, Punjab National Bank, but there are also some other regulatory changes that we are tracking. Let me take that across to Anjali Pulod, who's here with more details as to what we're given to understand. Anjali, good evening. Given the fact that, of course, it is going to come into effect tomorrow, and more importantly, a key takeaway of the same.
Starting 1st of October, there are a bunch of changes that are coming into effect. Let's take a look at some of the banking changes. If you are a HDFC Bank member of the Imperial program, the total relationship value should exceed 1 crore rupees, and that requirement comes into effect from the 1st of October. Additionally, if you are holding a salary account in Yes Bank, there are a bunch of charges that are going to see a revision, from ATM withdrawal limits to the debit card fees, as well as the check return penalties and cash transactions. There are going to be revised costs for all of these. Additionally, for Punjab National Bank customers, there are going to be higher locker rents, as well as the other charges are also going to be increased from the 1st of October. Additionally, the RBI is going to start the first batch of the continuous check clearing from the 4th of October, which means check clearance, which earlier took days, is now going to be completed within a couple of hours, and a bunch of banks are going to be participating in the first phase of this process. Now, let's take a look at some of the other changes. For NPS, these funds can now have 100% equity allocation in higher risk schemes from 75% earlier. And for IRCTC, the Aadhaar-based checks for online ticketing are going to begin from 1st of October, wherein the first 15 minutes of the general ticket booking timing will give preference to the ones with Aadhaar authentication. For India Post, there are going to be revised charges across categories coming into effect from 1st October, and UPI is going to discontinue the request payment feature for peer-to-peer payments, as there were a bunch of fraud cases being identified with this particular feature. And that's the roundup of all the changes that are going to come into effect from the 1st of October.
All right, Anjali, thank you for joining us with that. Let's shift our focus to the other significant development. The Telecom Regulatory Authority of India has today, in fact, released a consultation paper on the auction of radio frequency spectrum in the frequency bands identified for international mobile telecommunications. My colleague Samir Dixit joins in on the phone line with all the details. Samir, good evening. Important development. And if you're putting that into perspective, what more are we given to understand at this point?
So that's an important development in the space of telecom, where the telecom regulator TRAI, they have released the consultation paper, and this is related to the auction of the radio frequency spectrum, and this has been identified for the international mobile telecommunication. Now, let me add a point over here that this entire consultation paper has been released by the TRAI on the recommendation by the Department of Telecom, because Department of Telecom, they are actually looking to have the recommendations for the next round of spectrum allocation. Now, this entire this floating of the consultation paper, it actually focuses on couple of key areas, which includes like the applicable reserve price, what is going to be the band plan, what is going to be the quantum of spectrum for the existing IMT. In addition to this, the timing and the possibility of auction, that has also been sought from the regulator. Even the fresh recommendations for the 600 megahertz band, which was skipped in 2024, that has also been highlighted over here. So based on these things, the recommendations have been sought by TRAI, and now this consultation paper has been floated, for which the comments have been invited for the next 28 days. The last date to submit the comment is October 28th, and the counter comment can be submitted by November 11th. So TRAI will be giving the recommendations after this entire exercise is over to the Department of Telecom.
All right, Samir, thank you for joining us with those details. Let's shift our focus now. RBI has released its liquidity management framework, where the weighted average call rate will remain operating target of the monetary policy. Ankur Mishra with details on that front. Listen in.
Yes, RBI has revised the liquidity framework, which means the way RBI pumps money into banking system or takes out. Now the rules are decided or revised once again. Now this was already announced in the last monetary policy. It is going to change, but now the final rules are out. So what are the changes? WACR weighted average call rates will remain the key tool for liquidity for Reserve Bank of India. But more importantly, this time, short-term liquidity operations, there is a change that earlier 14-day reverse repo operations were used to be the main tool. Now that has been reduced to 7-day. So 7-day VRR or VRRR can be done, and that will be the operating tool. Now more than that, Reserve Bank of India has also said that they usually announce these repo in advance, but mandatorily a day in advance this notice needs to be given so that the market participants are prepared for that. Now as far as the bank CRR rule, they have to maintain the 90% CRR which was earlier, so there is no change in that front. In fact, there is no relief for banks for maintaining the CRR, and that 90% of daily CRR needs to be maintained. Also, standalone primary dealers can now access all these liquidity facilities, including repo as well as SDF. Now, in simple terms, what has changed? There will be more shorter kind of repo operations, which will be in turn availing the liquidity for banks as well as other participants in the system, and there will be more transparency because a day in advance notice will definitely help for banking system as well.
Right, Ankur. Thank you for joining us with those details. But clearly more important developments as we continue to put that into perspective, because brokers with ready systems for SEBI's retail algo trading framework can in fact go live from October 1st. But Anurag Joshi puts that into a perspective as to what we're given to understand and how that is also, of course, going to unfold. Listen to him.
Markets regulator, Securities and Exchange Board of India has said that those stockbrokers that are ready with the required systems that enable retail participation in algorithmic trading can go live from October 1st, that is tomorrow. SEBI has provided a glide path for stockbrokers for implementing this framework that will allow retail in algorithmic trading, and has said that brokers that are not ready to go live from October 1 need to provide information on their existing clients as of September 30th. The algo framework and the rules will apply for all brokers from April 1, 2026, SEBI has said. And those brokers that are failing to adhere to SEBI milestones will be barred from onboarding new retail clients for API algo from Jan 5th, SEBI has said in its circular.
All right, Anurag, thank you for joining us with that. But let's also move on to tell you how a breather for gold jewelry manufacturers is RBI has in fact issued a draft circular to allow for an extension of the tenure of the gold metal loans. Repayments for GML may now be made up to 270 days later. Anjali Palod joins with more details. Anjali, over to you. What do we know?
Right, so RBI has issued a draft circular for gold metal loans in which they've extended the maximum tenure for the repayment of these loans to 270 days from 180 days earlier. So banks may, as per their policy, extend the tenure up to 270 days. It has also included non-manufacturers of gold who will now be allowed to avail the gold metal loans for outsourced jewelry production. So in a sense, they've widened the scope for who can avail the gold metal loans. Now, jewelers had earlier written to RBI and Finance Ministry asking for this extension in the tenure for gold metal loans, and this is largely because of the surging gold prices that the demand for gold jewelry has come down, for fresh gold jewelry has come down. That has led to an extension of the working capital cycle for these jewelry manufacturers, and in general the time period between the manufacturing of gold jewelry and the sale, that has extended, and therefore that asked for an extension in the gold metal loans. Additionally, the interest rates on gold metal loans had also surged from 2 to 3% in January to as high as 6 to 7% in April. So given all of these factors, the gold jewelers and manufacturers were having a hard time servicing these loans, for which they had asked for this extension. Now, in terms of impact, just the extension of the gold metal loan repayment tenure allows for more room for hedging that a lot of organized jewelers such as Senco, Titan or Kalyan Jewelers for that matter use the GML for hedging. So the longer tenure allows for more room for doing that. And for the small and medium enterprises, the longer tenures will allow the extension of the working capital cycle and therefore have some sort of sigh of relief for the small and medium enterprises as well.
All right, let's shift our focus to more that we are tracking here on Business at 9, because food and snacking giant Haldiram Snacks Food has in fact started initial preparations on a possible IPO plan. In fact, the company's founders, what we do know at this moment, are holding early stage meetings with investment bankers to explore an initial public offering in the coming 12 to 18 months. Anurag Joshi with more.
Haldiram Snacks Food has started initial preparations for a possible initial public offering. Haldiram is the combined snacking and food business of the Delhi and Nagpur factions of the founder Agarwal family that runs Haldiram. And now the founders are holding early stage meetings with bankers to discuss the possibility of an IPO. And as far as the initial leads, the size that they are exploring will be about at least $1 billion. And this IPO plan they want to put in place over the next 12 to 18 months. And this is coming just months after, in March, Haldiram selling an about 10% equity stake to Temasek, and they sold that stake to Temasek for $1 billion. And just subsequently, they also sold 6% equity stake to two funds, IHC and Alpha Wave Global. In last year too, the Haldiram had explored various fundraising options, and the IPO was one of them. So they were looking to, last year, the promoters were looking to sell the entire business, but those plans could not work out, and eventually the promoters settled in for settling the minority stake in the company, and that stake was sold to Temasek and Alpha Wave Global.
All right, remains to be seen how that will pan out. But let's move on to what the markets did look like today, because it closed lower today, extending its continuous losing streak to the 8th consecutive session. Nifty, after initially trading over 24,700, was range bound for most of the session and eventually ended the September series around the strong support of 24,600. In terms of broader markets, mid-cap index closed marginally lower, while small-cap index ended with minor gains. Now, the decline in the market was led by selling pressure in media, realty and FMCG stocks, while of course when you're looking at it, select PSU banks, metals and auto stocks ended with healthy gains. But in terms of other sectoral performances, Nifty IT declined for the 8th consecutive session, dragged by persistent systems and emphasis, while Nifty Pharma also ended lower for the 7th consecutive session, with Vocard losing the most. But Ravinder, my colleague, puts that into perspective as we get a wrap-up of the first half of the financial year to take a look as to how D Street, in fact, has performed, and more importantly, which are the stocks and sectors to give maximum returns. Listen in to him.
Well, yes, in first half of FY26, market saw volatility, and if we talk about Nifty 50 index, the Nifty 50 index was up by 5%, but if we talk about broader indices, both Nifty mid cap and small cap, both the indices has outperformed Nifty 50 index in first half with 99% gain. And if we talk about the Nifty 50 gainer and losers during the first half of 26, Eternal was up by more than 61% in first half, and Hero Motoko was 42% up, and Maruti Suzuki was 39% up. And but tech sector was in reverse gear, where TCS has crashed 20%, HCL Tech with 13%, and Wipro lost 9% in first half of FY26. And if we talk about mid-cap index gainers and losers, then L&T Finance was up by 60%, Aditya Birla Capital rallied 57%, and Motilal Oswal has gained 49% in first half. And on the loser front, Torrent Pharma dimmed 18%, while Sona BLW and Persistent System was also slapped between both 12%. And if we talk about small cap index, then in small cap index delivery, HBL Engineering delivered a gain of standing 72% each, and Godfrey Free was up by 56%, and Data Patterns has rallied 50%. And on the flip side, PG Electroplast was down 45%, RK Foraging cracked 33%, and 5-star Business lost its line with 29% in first half half of FY26. And if we talk about the sector indices performance in first half, then auto sector was a top gainer in H1 FY26 with 24% gain. Nifty PSU Bank was up 18%, Nifty Metal was 9%, and Nifty Bank was up by 6% in the first half. And on the flip side, Nifty IT was the only sector indices that is in red with 9% decline in the first half of FY26.
All right, Ravinder, thank you for that. But let's slip into a quick break here on Business at 9. Stay with us. We'll be right back with lots more on the other side this Tuesday. Welcome back. You're watching Business at 9. In fact, putting into perspective what, of course, we are given to understand with the scope of rate cuts for financial year 26, we had the opportunity to catch up with economists to understand that. And they also believe that there is potential for rate cuts in the December meet. Let's listen in to know their rationale.
RBI can wait and watch and see how the GST impact on the festive related spending, how all of this is going to play out, how the tariff related uncertainties are going to play out in due course. And probably from December policy or February policy, we see room for rate cuts, which probably could be to the tune of about 25 to 50 basis additionally.
We are in the camp of expecting the RBI to actually, pause at this meeting. Certainly, there are conditions for which they, especially if you talk about growth. So growth has been quite strong, wasn't quite strong in the first quarter. We think the second quarter growth could also be 7% plus.
Growth data that we've had between the last policy meeting and this policy meeting hasn't really shown any renewed weakness. On the one hand, the 50% tariffs is hurting growth. But on the other hand, all of the tax cuts that we've seen, income tax, GST, that's adding to growth. So overall, the two are crossing each other and there's no renewed reason on the back of growth to really give a rate cut in October.
All right. Also putting into perspective, what are the key events that are happening tomorrow? Rabinder, my colleague, puts that into context. Let's listen.
Well, yes, in India, all eyes will be on monthly auto sales number, RBI MPC policy outcome, and the weekly Sensex expiry, with manufacturing PMI giving a snapshot of the factory activity on the 1st of October. And if we talk about globally, then globally the US will set the tone with ISM manufacturing print, S&P Global PMI, and auto sales number. Now shifting focus from US to UK. UK will release its manufacturing PMI, while in Eurozone, traders will watch the CPI data along with the HCOB manufacturing PMI for cues on inflation and growth. And over the Asia, China will kick off its Golden Week holiday from 1st of October to 8th of October, a period that could mute activity, while in Japan, the S&P Global Manufacturing PMI and the Tankan survey will offer the insights into sentiment and industrial wealth. Now shifting focus from global back to home on IPO front, Gen Resource Recycling, EPAC, Prefab will list, and Glottis IPO and Fabtech Technologies will close the subscription. And finally, the lock-in period ends for the Vikran Engineering, with 5% of the shares coming up for the trade.
All right, Rabinder, thank you for joining us with those details. But let's now shift our focus to what Wall Street is looking like, because stocks have clearly retreated as the U.S. government veering toward a shutdown-stoked anxiety about the possibly delayed release of the key economic data. In fact, the Federal Reserve needs to keep cutting interest rate. Although shutdowns aren't usually market-moving events, this time could be different as investors are already wary about the slowing labor market that is. But quickly talking about what Wall Street is looking like, beg your pardon, currently trading at 46,200 with a points change of minus 115.57, so it's down by that much. There's also a downtick of minus 0.25. Even if you're talking about S&P 500, currently trading at 6,654, also are currently trading in red with the points change of minus 7.17 at the moment. Nasdaq also doesn't look very different, is currently trading in red again, but the points check of being about 22,557 at the moment. In terms of overall the picture for Wall Street not looking good, but a shutdown could also prompt rating agencies to rethink the condition of U.S. credit, which was of course downgraded in May by Moody's. So essentially in the backdrop of that, we're also looking at what is really transpiring here. But from the Wall Street picture, let's move to the India picture, the India growth story, and what Chandrababu Naidu makes of it. Because Andhra Pradesh CM Chandrababu Naidu says that nobody can stop India's growth momentum. This is in response to the H-1B visa row. He's also revealed his government's efforts in boosting electronics manufacturing. Let's listen.
Government of India has recommended for Andhra Pradesh packaging industries by Korean company. We are starting another quantum computer. We are moving forward. First quantum computer is going to set up in Amaravati. Now with quantum computer initiative, we are able to move forward how to manufacture quantum computers. That also we are working. Another thing, Government of India has announced space privatization, private investment. Now we are going for Space City to launch satellites. Now they are promoting drones also. We are having a drone city to manufacture drones for defense and also civilian applications. In a big way, we are going for electronic city. We are very strong now on electronics.
So how
we are
soon is the
moving
electronic
forward.
city coming up? How soon is the electronic city coming
No,
up?
already we are having some electronic hubs.
Right.
3-4 we are going to create in a big way. We are going to attract big investments in electronics.
So you also spoke about Google manufacturing its biggest data center in the state. What are the timelines that you're working with as
No,
far as
this
that
month they are going to announce. You will see the.
So how soon?
Very soon they are going to announce.
Right. So just one final question that I want to ask you about the geopolitical headwinds that we are seeing, and of course, Donald Trump administration has worked out H-1B visa fee increase. How do you plan to sort of navigate
challenges,
that?
opportunities always move forward.
Right.
There is a challenge, there is an opportunity.
Alright, the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. And to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. So as part of the campaign, we are observing the 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. And having said that, thank you very much for taking the time out and joining us here on behalf of my team and I. Thank you for joining us here on Business at Night. Good night.